guys, Joseph here again. Thank you so much for joining me on yet another edition of my weekly video. If this is the first time that you're watching this video, I want to welcome you and thank you so much for tuning in. And I hope you like what you see by the end of this video. And I also want to thank you guys for your continued support. I want you to know that I really do appreciate them. So anyway, in today's video, I've got two trading opportunities that I want to show you guys. One of them is purely based on structure, and the other one is an advanced pattern. And I've also got the results of this week's trading to show you guys. It hasn't been a great week. We've had to give something back to the market. So stay tuned after the analysis and I'm going to show you guys the results. So anyway, let's head over to the charts. So as you can see, I've got a different kind of theme on my chart. I kind of like this one. I think it's time for a change. I think I'm going to try doing my analysis on this one and see how it goes first of all. So anyway, I've got my chart on the daily time frame. I'm looking at the pound against the US dollar, and the trading opportunity I want to show you guys is an advanced pattern. But before we get there, I just want to show you guys what the market has done and kind of ways that you can, as a technical trader, these are the kind of ways that you can use to predict what the market is going to do. I mean, it doesn't always do exactly as you've predicted, but chances are, if you know how to read the market structure, you know you are going to get things right, at least more than 50% of the time, really. So anyway, we've had this huge downward move after the Brexit, and what happened after that is that the market kind of consolidated within this channel. So we can see that, you know, after setting these lows, the market rallied for a bit, came back down into the previous structure, and then it rallied a bit, came back down into that previous structure, and then we finally broke that previous structure, setting all-time lows. Now the market is likely to do exactly what it's done here. So I'm expecting the market to kind of come into a little bit of consolidation before we finally break to the downside. And the market has come back into that previous structure now. So now this is going to present us with a potential buying opportunity. So even though the market is bearish on a higher time frame, you know, we do have a potential counter trade trading opportunity. And the advanced pattern I want to show you guys is actually a bearish advanced pattern. But before we get there, for some people, they might have those people that trade counter trend or structure, you might have a buying opportunity. So I'm just gonna draw this channel for you here, right here, because this is where I expect the market to stay into this in this channel for a little while before we see any movement. So I'm gonna take my chart back onto the 4-hour chart, 4-hour time frame. Excuse me. So you see these two lines that I drew, these two channels. This is where I expect the market to be. So if I kind of move this back into, this is where, you know, in terms of previous structure, I mean, this line has been tested a lot of times, and we can see that the market is actually right there, just a little bit above that line. So this is going to present us with a buying opportunity. However, this is not my strategy. I mean, I wouldn't even be looking to, but even though it's going to be potentially it's going to be a very good trading opportunity, but it's not really within my rules, so I wouldn't be trading it. So the trading opportunity that I'm going to be keeping my eye on is going to be this advanced pattern. Actually, what's that? That has to be on this advanced pattern. We do have a potential Gartley pattern setting up on this current space. So as you can see, X to A leg, we got the 618 retracement, and I feel this might be better off if I show you guys this on the 1-hour chart on our time frame. So yeah, I think it's much better now. So let me start again. So X to A leg, I'm gonna have to, you know, format this my Fibonacci tool, because I haven't, that's what I haven't changed actually on this theme, on this black theme that I'm using. So I'm gonna have to change that afterwards, but I apologize for that. So anyway, so we got the 618 retracement here. So for a Gartley pattern, we're looking for the 127 extension of the A to B leg. So as you can see, we came in, touched the 618 retracement again. So that gives us a potential Gartley pattern. So if the market rallies, and there is a chance that the market is going to rally because we've come into the previous structure. Those of you guys that trade the C leg of an advanced pattern, this could potentially be a very good opportunity, because you're going to be buying at previous structure, hoping that the market is going to rally into the 127 extension. And look what we also have here is the fact that we have a 1-to-1 harmonic move Let me just clone this and show you guys where the harmonic is going to terminate. Look at that, exactly at the 127 extension. But look what we also have. So even having the harmonic move on the 127 extension, we also have the 886 retracement, which is going to terminate at about the same point. So we got a Fibonacci confluence there, one-to-one harmonic move, and the fact that the market is bearish on a higher time frame. So this gives us a potentially good trading opportunity. So let me go ahead and draw the Gartley pattern for you guys. X to A leg, A to B leg, B to C, C to D. The Gartley pattern is going to terminate around 123.90s. I mean, we're not too far off from there. We're only just 200 pips from our entry point, really. So this is definitely an opportunity that I'll be keeping my eye on. I mean, we had a bullish cipher pattern that ended up taking us on a loss on this currency pair last week. But yeah, it happens. I mean, all you can do is just to try and be consistent with your analysis. What happens after that, you have no control over that. So anyway, so that's the one that I will be keeping my eye on. Hopefully, we're gonna get there. I mean, obviously, there is, like I said, like I mentioned earlier, those that trade the C leg of a Gartley pattern or the structure traders. This looks like a potentially decent, good trading opportunity for you guys, in order to look for the market to come back and complete the Gartley pattern. So anyway, moving on to the next currency pair that I want to go over with you guys, the US dollar against Canada. Now this is not an advanced pattern. This is more like a purely structure trading. But you're gonna have to be very cautious when you're taking this trade. So first of all, I'm gonna draw this rising trend line that we had here. I mean, those of you guys that are familiar with rising channel, which is a form of a complex consolidation, I think we would you would have recognized this, because we had this huge bearish move, and then the market kind of consolidated within this channel, and this is what is called a rising wedge. And if you're familiar with rising wedge, all rising wedge break to the downside. So regardless if the market is bullish and you have a rising wedge, that market is eventually going to break to the downside. It doesn't always happen, but most of the time it does break to the downside. So we can see that the market has finally broken that rising trend line. However, the market hasn't quite closed below the previous structure, the previous low. So looking at this previous low, this is what you need to be careful. So even though the market has broken this structure, I mean, chances are the market is going to go down. I mean, if I know the market is going to go down. I mean, if you know what structure is, if you know what structure trading is, this market is going to be heading down, and there's potentially a huge amount of pips to be taken. I mean, we're talking about 500-600 pips, in the market. But however, you have to be cautious when you enter this trade. Like I said, this is not my trading style. This is not my strategy. So I'm not even going to be trading it. But however, I'm going to show you guys, just you guys that do trade structure, this is a potentially good trading opportunity. But you need to wait. You need to wait. And this is the two ways that you can wait for it. You can either wait for this market to break and close below this previous low, and then you will look for an entry, a reason for entry to go short on the market. Or you can wait for this market to kind of consolidate. Now that we've broken that rising trend line, you can look for the market to consolidate here. So the market can either consolidate in the form of another rising wedge. We can see a little consolidation. Let me see if I have a tool that can draw that for you. Probably don't. What's that one? Let me make it pink. So you can look for the market to kind of consolidate here and do something like that in the form of a rising wedge, and then you can look to sell the market, or you can wait for the market to break and close below this previous low. But mark my words, this market is heading down. I mean, look at, this is the first place that you're going to be looking to take your first profit target, previous structure right here, and we can see around 600 pips to be taken from that. But you have to wait. You have to be cautious. Because the reason why I said the market, you have to wait for the market to, preferably you have to wait for the market to break and close with this previous low, because this can just be a false breakout, and we can see the market rally back into that rising trend line. So we can see that into the upper channel of the rising trend line. So the market can easily rally back into that, as long as if it doesn't break this previous low, it can rally back up. So it just depends on what the market does here. So that's how you have to keep watching. Wait for the market to form a rising wedge to consolidate outside this trend line, and then you can look for opportunities to sell. And if it doesn't do that, you have to wait for the break and close below the previous low. So that's how I'm gonna play it anyway. If I was trading this structure, if I was trading this strategy, that's how I would play it. It's all about waiting. You have to wait for the moment before jumping onto the trade. Because there's no point jumping in the trade right now, because you have no, the only confirmation you got is the fact the market has broken that rising trend line, but we haven't broken the previous low. So that's why sometimes it's very important to wait, to be patient, and wait for the right moment to strike. So anyway, those are the two trading opportunities I wanted to show you guys. And so anyway, back to our signal service this week. We haven't had the best of weeks, to be honest. We've had to give something back. So as you can see, the 4 trades that we've taken on, all of them were all cipher patterns. We had 2 winners on the bearish cipher pattern and 2 losers on the bullish cipher. So this is the pound US dollar cipher, that pattern I was talking about. I'm going to show you guys in a minute. But we had one decent winner, euro yen, and this was actually a trade that I posted on TradingView. For those of you that are not following me on TradingView, you probably missed out on that one. And this one we had a 1 target winner. So anyway, let me just go off to let me start off with the first one, the euro against the yen, the bearish cipher that we had. So euro against the yen, this was the bearish cipher. This was the trade that I posted for my signal service members. As you can see, I posted this trade way before the market even completed the cipher pattern. And however, on my TradingView page, look at when I posted this trade. I posted this trade at exactly the entry point. And let me just play in to show you guys what happened. So you can see that the market kind of, we did endure a little bit of pain, but then the market kind of rolled over, hitting our first and second target, giving us a total pips I think about 59 pips on both targets. So that moving on to the next, this is the pound dollar cipher pattern that took us out for a huge loss, 71 pips, which kind of hurts. But so let me just go ahead and delete all of this and show you guys. Pound US dollar, delete all of that. I'm gonna switch my trade back on my chart back onto the 1 hour time frame. Yeah, so this was the cipher pattern here: X to A leg, A to B leg, and B to C leg. So as you can see, the market never really, gave us, you never really looked back, taking us out on a huge 71 pips loss. But we take it and we move on, because that's what we do as traders. Take the loss on the chin and just move on to the next one. And the next one was actually a losing trade as well. Swiss franc against the Japanese yen. We had another bullish cipher pattern that ended up after. This was a trade that I think I posted this trade on TradingView as well, if I'm not mistaken. Yes, I did. So this is the chart that I posted on TradingView. As you can see, the market came very close to our first profit target. In fact, came within a couple of pips. But this is one of the things that you're gonna have to get used to as a traders. I mean, as traders, things like that are gonna happen a lot of the times. Sometimes the market gonna come close to your profit target. You're thinking, oh, it's gonna be a winner. It's gonna be a winner. Because I think when the market was rallying, a lot of people started liking this chart. I could get a couple of likes. People said, oh, that's a good trade. But then the market kind of rolled over, taking us out on our stop loss. I mean, it hurts, but it's part of trading again. So we took that loss, and I think it was 48 pips loss on that one. Yeah, and then we moved on to the next one. Euro against the dollar. We had another bearish cipher pattern. This one only gave us the first target. So euro dollar. So it was back onto the euro dollar cipher pattern. So as we can see, the market came in. It came within our stop loss. How many pips was that? About 7 pips past stop loss, and then the market kind of rolled over, hitting our first target, and then it rallied to take us out on break even on our other half of the position. So it wasn't a great week, but at the end of the day, it wasn't a bad week. I mean, we've had to get 43 pips back onto the market. Like I said, I'm not going to start feeling all of this until after the first month of trading. So as you can see, we're just on 54 pips on the first month of trading of 2017. So we'll see how that is going to pan out. But yeah, that's it. I mean, like I said, this is I'm still offering the first month of free for my Signal service. So you guys, if you sign up, you're gonna get the first month free. All these results that I'm posting, all these results, you can see it for yourself. Like there's no hiding place really, because I tend to show you guys everything that's going on. So yeah, so if you still haven't signed up, the link is at the bottom of this video. So click on it, sign up, and you can see maybe this week we can have a good week or not. But yeah, we'll see how the trading is gonna go. So anyway, and another thing again, my trading view link is also at the bottom of this video, so you guys can go ahead and follow me, and you can see all the posts that I'm posting, because I've been posting a lot lately, really. Like this year, I'm making an effort to be posting most of my charts on trading view. So that's the only place to see it with no but the only difference is all the charts I'm going to be posting on trading view are the charts that once the advanced pattern completes, or is within a few minutes of being completed, that's when I post it. So you guys, you might miss it. So unless you're following me on trading view, you're not really gonna see the updates. So anyway, this is it for today. I think that's all I can think of. Like I said, we'll keep an eye on the two trading opportunities that are developing, and see how the market is gonna treat us this week. So anyway, thank you guys for watching. As always, I hope you have. I wish you good luck in the markets this week, and until next time, keep it simple.